everyone, and welcome back to my channel. This is your San Diego realtor Carolina, and this week I'm here to talk to you about hidden fees for buyers. Now, for hidden fees on the buyer side, there are a lot. It's typically between 2 to 5% of your purchase price, but it covers anywhere from your So I know that's a lot. Now let me just kind of break it down for you to be a little more clearer and what do closing costs really include and what exactly that covers. So the closing costs themselves will depend on where you buy your home, if it's in the city or in the county, if it's downtown, suburbia, whatever it may be. The home itself, what value it's at, what it appraises for, and as well as what type of loan you do purchase, whether it's FHA, conventional, VA. And here is a breakdown of just common closing costs. I may miss one or two or a few, but this is just the most common that I've seen and that I've worked with or that I've been questioned about by my own buyer clients. First, we'll go over property related costs, starting with the appraisal. The appraisal is typically paid for by the lender. It's kind of seen as a promise to work together type thing, where the lender for the buyer will pay for the appraisal, typically between $300 to $500, and that will just go over the value of the home and see if the loan is really worth the sale price. The escrow fees that you will be paying are typically upfront insurance and some property taxes. I've seen where you do monthly insurance from the 2 months that's typically over the escrow period, and that's maybe about $150. There's others where it's the actual portion of the property taxes that you have twice a year. The example that I have was from March to April, and that was $800 for a semi-annual amount. The flood certification is about $15 to $20 depending on where your home is and if it is or isn't within a flood area. And the certification will be coming to you from FEMA, for the Federal Emergency Management Agency. Now, home inspections are one of the bigger surprises that I've seen. It can literally be anywhere from $500 to $1,000. I've personally had a condo for $350 and then a twin home for $400. But depending on the square footage and the type of inspection, it can go anywhere up to $1,000. The bigger the house, the bigger the inspection, the more time they have to walk around your home. If it's a house, a detached house, they'll get on the roof. If it has a crawl space, they get in there and they really inspect everything for any damages or defects. This is where you'll really find out if the electrical is up to code, if the building itself is up to code. The property taxes typically pays to the city and the county, and they're usually from the date of closing to the end of the year. And again, that all depends. My previous escrow was from March to April, and they only charged them $154. And then the other that they charged was from March to July, and that was the $800. For the annual assessments, this is typically for a home within an HOA, and the HOA may have you pay upfront at closing, which in my experience was about $440 for the year. But again, that depends on how much your HOA is a month. Next, we're gonna go over the loan related costs, and that goes over title, loan, lender, application, assumption, prepaid loan origination, discount, and even title search. So the title and attorney fees are for government filing fees, escrow fees, notary fees, and I believe any other expenses that are required when you're transferring the deed from the seller to the buyer. And the cost of the title and attorney varies significantly from state to state. So the loan interest is something that you'll need to pay prorated from the closing date to the first of the following month. Lender fees is definitely one of the reasons why I tell a lot of my clients to shop around with different lenders. A lot of lenders, well, not a lot. Some lenders will be advertising that they have really low rates, but it's also possible that they are trying to make up for that low rate by adding on additional lender fees. So you definitely should be asking, like, go to your bank, go to lenders that your agent recommends, and see what the differences are and the similarities and who really gives you the best deal. There is also an application fee typically with lenders. It's about $500, but it could vary with every lender. And it's usually a non-refundable even if you don't get approved for the loan. So definitely ask about that first. There are also assumption fees if you are assuming if you are assuming the seller's loan. If you're doing a conventional loan and you're taking it over for the seller, it's usually about $800 to $1,000, but in some cases it's 1% of the loan amount. For FHA loans, it's typically a maximum of about $500 and the VA is $300. Prepaid interest is again a daily interest that is accrued from the day of closing to the first day of the month of your mortgage payment. There is the loan origination fee, and this is the fee that is paid to the lender to obtain a mortgage, and they're usually expressed as a percentage of the loan. So if your loan is $500,000 and you see a $5,000 loan origination fee on the paperwork, that is what the lender is charging you for the mortgage. There are also is a thing called discount points, which is something you should look into if you're looking to get a lower interest rate. Right now it's not really necessary because we're at such low interest rates, but once interest rates are higher, you can actually pay your lender a certain amount to lower your interest rates, and that's what is called the discount points. 1 point typically costs about 1% of your mortgage amount. So again, if you're buying a $500,000 home, you would pay 1%, $5,000 for a 1% drop in your interest rate. The title search fee is for the property's history search, and that's typically between $75 to $100. And this is a fee that I 100% will tell all my buyers for. Like, I'll buy it if you are that hesitant over it. It's making sure that your new home is free and clear. No one's gonna come out of the woodwork and say, this is my house and I own it, or there's no liens on it. There's nothing really legally wrong with the property, and it's something that's seriously required. So there are also other insurance related costs. And the biggest one would be mortgage insurance, which is the PMI. If you are paying less than 20% down, the lender will typically require you to pay a private mortgage insurance, but this fee varies with lenders. So actual loan fees for the FHA, VA, and USDA fees vary from the conventional loans. The FHA loan usually requires an upfront mortgage insurance premium of about 1.75% and a monthly fee. The VA home loan requires an upfront one-time VA funding fee, and that's determined by the loan amount. The lender and owner title insurance is a lender policy protects the lender, buyer policy protects the buyer, and it's usually a one-time fee of about $1,000 paid for by the buyer. Now, closing costs are completely negotiable. It always depends on your buyer's agent. They should be the ones that are really educating you, because you should really be choosing your battles wisely depending on the market when you're buying. And I hope all that really helped, because that was a lot of information. If you have any questions, comments, or concerns, please leave them in the comments below. If not, subscribe and like my video for more content. Thank you.